Have you ever felt like no matter how hard you try, financial security always seems just out of reach? I'm here to help you out. Let's dig in, because once we know what these threats are, we'll be in a much stronger position to protect our financial future. 1. Living without a budget. I will share with you an exception to this, but let's start with this most common one: not having a budget. Think of a budget as your financial map. Without it, you're just wandering around, hoping to end up somewhere good. But here's the thing: even if you're making decent money, not knowing where your dollars are going can seriously hurt your financial health. Imagine going on a road trip without a map. You're bound to get lost or waste a lot of gas. Your budget is your GPS, guiding you towards financial security. The exception I mentioned earlier is if you already have a set-in-stone lifestyle and you're not making any changes to it. What does this mean? This means for months and years, your activities and expenses remain same. Pay attention here though. Both of them have to remain same, because even if we conduct the same activities for years, we know as long as they involve money, price may change over time. So as our expenses. As long as you're conscious that both of them remain same for you, and that your income streams stay healthy, best with a growth, then I can let you go without having a budget. But you still need the calming tips to ensure your financial health and grow your wealth. And if you're just starting out on your personal finance journey, it's still better to have a budget to set a benchmark for yourself. 2. Relying on a single income stream. Here's something most people don't think about until it's too late. Relying on just one source of income. Your job might feel stable, but what happens if that source of income suddenly dries up? It can be caused by an internal factor of the company you work for, or external macro factors, which both are probably not in your direct control. It's like sitting on a one-legged stool. Pretty shaky, right? The wealthy know the importance of having multiple income streams, whether it's investing, side hustles, or passive income. Building multiple streams is like building legs on that stool. It makes our financial security much more stable. 3. Not having an emergency fund. Life happens. Cars break down, medical bills pop up, and sometimes the unexpected is expensive. Without an emergency fund, even small financial hiccups can turn into huge problems. It's like driving without a spare tire. If you get a flat, you're stuck. But with an emergency fund, you can change the tire and keep moving. Experts recommend saving 3 to 6 months worth of expenses. I usually set it to 9 to 12 months. You don't need to start with that lump sum right away. Even starting with $100 a month can be a lifesaver over time. 4. Credit card debt. Credit cards can be helpful, but they are also dangerous if you will not manage it well. Carrying a balance month to month is like dragging a ball and chain. The interest piles up, and before you know it, that $100 dinner out has turned into $150 or more. If you're using credit to buy things you can't afford, it's time to rethink. Think of that like quicksand. The more you struggle without a plan, the deeper you sink. I ensure I have the money in my bank account to pay for what I spent on credit cards before even purchasing anything. This also reminds us why having a budget is important. 5. Lifestyle inflation. Lifestyle inflation is sneaky. You get a raise, suddenly you're buying nicer things, upgrading your car, eating out more often, maybe even moving into a bigger house. It's all good, right? Not really. As your lifestyle inflates, your expenses grow, and before you know it, the raise is eaten up. You're back at square one, still paycheck to paycheck. It's like running on a treadmill. No matter how fast you go, you're not moving forward. There's one way we can allow this to happen. It is when the interest and dividends income generated from our savings and investments alone are able to support this inflation, not before we have our passive income streams well established. 6. Lack of financial education. One of the biggest threats to financial security is simply not knowing how money works. Schools don't teach us a lot of this stuff, so it's up to us to learn it on our own. Financial education is like having the user manual to life. When you understand how to invest, budget, save, and manage debt, you're equipped with the tools to build wealth. Without it, you're flying blind, making mistakes that could easily be avoided. Since you're here with me, especially if you have subscribed, I'm less worried about this. 7. Impulse spending. We've probably been there. You see something, you want it, and before you know it, you've bought it without even thinking. Impulse spending is like adding small leaks to your financial boat. Each little splurge may not seem like a big deal, but over time, they add up. You want to make sure your money is working for you, not leaking away on things you don't even remember buying. 8. Emotional spending. This one is similar to impulse spending, but not due to our want or sudden desire from what we see. We all have those days when we're stressed or sad, and buying something feels like a quick fix. But emotional spending can become a dangerous habit. It's like using sugar to feel better. It works in the moment, but too much of it leads to long-term problems. The trick is to recognize when you are about to make an emotional purchase and pause before hitting buy. 9. Ignoring inflation. Inflation is that silent thief in the night, slowly eroding the value of our money. If our savings aren't growing at a rate that outpaces inflation, we are actually losing money over time. It's like keeping our money in a drawer while the cost of everything around us goes up. Investing is our best defense against inflation because it allows our money to grow over time. 10. High-cost debt. High-interest debt, like payday loans or high-interest credit cards, is one of the biggest threats to our financial security. It's like trying to fill a bucket with a giant hole in the bottom. No matter how much we put in, it keeps leaking out. Paying off this type of debt should be a top priority because it's draining our resources faster than we can build them. Best is not to incur these debts in the first place. Seek alternatives or ask for advice on other means to solve your issue at hand first. 11. Not having insurance. Insurance might feel like an unnecessary expense, but it's one of those things that's better to have than to need and not have. Whether it's health insurance, car insurance, or renter's insurance, having the right coverage can save you from financial disaster. Think of insurance as a safety net. You might never need it, but when you do, it's a lifesaver. I have my first insurance policies as soon as I reached 20. One of them I have the premium fully paid already, and another in a few years' time. Looking back, it's one of the best financial decisions I have made. 12. Procrastination. Waiting to make financial decisions is a huge threat to our financial security. Whether it's putting off starting that retirement account or delaying that repayment, procrastination costs us time, and in the world of finance, time is money. It's like being stuck in a traffic jam. The longer we wait, the more we lose, while the people who started early are already miles ahead. However, be mindful this doesn't include FOMO into something high risk, including investment products, especially if people are telling you it's a once-in-a-lifetime offer. Some people would benefit from those situations, but more would get burned. The key here is, if it's a prudent decision to improve your financial situation, go ahead and don't drag on. 13. Not investing. Speaking of procrastination, let's talk about investing. A lot of people are afraid of the stock market because they think it's risky. But not investing is actually riskier. By not investing, you're missing out on potential growth. It's like leaving your car parked while everyone else is driving towards their destination. Sure, you're safe where you are, but you're not getting anywhere. 14. Overspending on housing. Our homes should be a place of comfort, not a financial burden. But for many, housing costs eat up way too much of their income. It's tempting to upgrade to a bigger house or move to a nicer neighborhood. But if it stretches our budget too thin, it's not worth it. It's like buying a mansion with no furniture. We might have the house, but we can't really enjoy it. Do deeper research into all the associated costs. May that be mortgage interest expense, especially if you are on a floating rate mortgage, maintenance costs, tax, renovation, etc. 15. Not having a plan for large expenses. Whether it's a new car, home repairs, or a big vacation, failing to plan for large expenses can throw your finances into chaos. The rich don't get blindsided by big expenses. They plan for that. It's like knowing there's a storm coming and building a shelter. Poor financial planning is like waiting until the rain starts to pouring to realize you don't have an umbrella. Like I mentioned earlier, aim to have your interest and dividend income to finance these expenses in the long run. 16. Not saving for retirement early. I know retirement feels like it's a million years away if you're in your 20s or 30s. But here's the deal. The earlier we start saving, the easier it becomes. Compound interest is like planting a tree. The earlier we plant, the bigger it grows. Waiting too long to start saving is like waiting until the last minute to plant your tree. We may have a small tree that's around our height, but certainly not a big shade that can give us the peace of mind. 17. Not taking advantage of employer benefits. If you are lucky enough to have a job that offers benefits like a pension or retirement scheme match, health savings account, or stock options, and you are not taking full advantage of them, you are leaving money on the table. It's like going to a buffet and only eating bread. You're missing out on all the good stuff that could help you in the long run. 18. Overconfidence. If no one told you this, one of the biggest threats to financial security is overconfidence. Thinking we know it all, or that we don't need any help, can lead to poor decisions. The smartest people know they don't know everything. It's like going to a jungle without a guide. You might think you're fine, but without someone showing you the way, you're likely to get lost. Now that you're aware of the 18 biggest threats to our financial security, you can start taking steps to avoid these traps. Remember, financial security isn't just about how much money we make. It's about the choices we make every day. Small changes can lead to big results over time. If you found this helpful, don't forget to share with someone who could use these tips. Let's protect our financial futures together. Here's another video that may help you. See you around at Asset Tech.